India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, coming to you live from the CNBC-TV18 and the Motilal Oswal studios here in Mumbai. I'm Lata Venkatesh and with me is my colleague Surabhi. Yes, we are not triplets in Bazaar, we are only twins, and that explains how much both CNBC-TV18 and the world outside is enjoying the Christmas vacation. I do envy them, but don't grudge their happiness. The city itself was in gay, coloured, well decorated yesterday. It was a sight for sore eyes, lights everywhere. And today, I guess most of you are glued to your TV or your mobiles watching
Cricket?
Boxing Day match.
Absolutely. So I think most, those who are in office and of course are trading, they will be toggling between what's happening in the market and, of course, what's happening on the pitch out there in Australia. But, of course, season's greetings to everybody and a Merry Christmas to all our viewers. Hope you had a fantastic midweek break and the midweek holiday. But Lata, for the markets as well, right? So many markets have been quiet. Many in Asia are actually closed for the Boxing Day holiday. So thank you.
Yes, I know. Sensible people do close when the market is not in a mood to trade. But what do we have for us in terms of cues? The US indexes ended at, with 1% gains, as you can see, nearly 1% for the Dow, and repeat performance on the Nasdaq. 2 days on the trot, the Nasdaq has done very well. But will it rub off on Indian stocks? My sense is no. This is continuing what you call US exceptionalism, with money getting attracted there. And I'll tell you why in a minute. See, the Indian FPI sales itself was 2,400 crores on Tuesday, on a day when you saw the market rise and give back all its gains because there was selling. Now, why is there so much selling even though the US is doing well? It's largely because the other indexes or other parameters are indicating that it makes a lot of sense to be in dollars. The US bond in 10-year Treasury bond yields were up at 4.6%. Now, this is risk-free yield. You are holding dollars and you're getting a 4.6% yield, plus dollar index itself has risen and remains above the 108 mark. We saw a brief blip last weekend of about 107.6, but it's gone over 108. So it makes every sense to hold it. And as the dollar rises, the rupee has on Tuesday seen a new low of 85.2, almost. It doesn't make sense to be in a currency, hold its shares when the currency also depletes as well. You're not getting that much of gains on the share market. The US markets, the mother market, is getting it right everywhere. It's getting right in bond yields. It's getting it right on the strength of the currency. It's getting it right in equity returns as well. So one shouldn't expect much. I just want to add a bit of negative news that came in. For those of us who read this very closely, the Reserve Bank's bulletin, December bulletin, every bulletin has a chapter called the State of the Economy. And there quietly, the Reserve Bank has further lowered its growth forecast. For the current quarter, it remains at 6.8. They had lowered it from 7.4 in the monetary policy itself. But they had kept a 7.2% for Q4. That has now been lowered to 6.5%. So that is a kind of a reality check. Now the average over the 4 quarters comes to 6.4. In the December monetary policy, they had said 6.6, which means in a matter of 3 weeks, the Reserve Bank has lost its confidence that the growth can be above 6.5%. Well, this can be read as a hint for rate cut, but really, that's the negative. I just want to add one more point. Surabhi, today's expiry day, the Nifty expiry day. And chances are that it started off at 23,914, I think. So people will try and push it to that level simply because, there isn't FII, there isn't the other party to give, to take away the money. So it's possible that you'll be able to see this engineering. And I think this engineering of stock prices I don't want to call it manipulation, I'll call it management of stock price, may continue on 30th and 31st because that will help NAV management. So we may see green days, but let's not run away. That represents growth.
We have to, I think, wait for the market to come back in its entirety 2nd January onwards, really. Basically after the first week of January to get a full trend. But in any case, when we will make do with the cues that we have for now. And the ones that are coming in from Asia actually are not too bad. They're taking that positive handover from Wall Street. And many of the markets that are open, they're managing some gains as well. Some like Australia and New Zealand are still shut. I think even Hang Seng, the trading hours are limited and restricted. So the cues are largely positive. Now, out of China and Japan, there's some news points over the holiday and today. So I thought I'll put that on the table. In Japan, the talk is about the budget. Their fiscal year also starts in April. And for that fiscal year, the budget is going to be a record 735 billion. So the Japanese are also spending more. They want to sort of service their debt, and they're looking at more social security programs, which is, of course, something that that economy in that country needs given the age demographic. So that's Japan in news. The market's taking it quite well. The Nikkei has been up and about. So it's not a shocker in terms of how the government is looking at its budget for next year. China has announced more property market measures. They've been doing that through the year, right? And there were more announcements on Christmas Day as well. Now, what is China looking to do? They're saying that we will expand the urban village renovation program. They were looking at 1 million units. Now they'll do a little more. And they will look at tighter control of supply in the commercial housing space as well. So looking at managing commercial supply and prices. What a lot of these measures have done is that the pace at which home prices have been falling, property prices have been falling in China, that has reduced. In November, the pace of that fall came down even more, but there's still contraction. Anyway, from a stock market perspective, this is not what the stock market is waiting for. The stock market's looking for that helicopter money for big monetary announcements or a massive fiscal announcement coming through, which will only happen next year after the Lunar New Year break, somewhere closer to March. But for what it's worth, that's the China news flow today. Now, like Lata was saying, the fact is that the Indian market has not been able to even hold on to Santa. I remember Nigel saying before he went on his break, Santa comes, the problem is he dashes out of the door very quickly. Even if you get that opening green, which is what was happening on Monday and Tuesday, you might start slightly positive with these cues, but then you sell down through the course of the day, and Tuesday saw that happen again. Tuesday was the second day that the market could not conquer the 200 DMA. It kind of went to that mark and then slipped again, which is a sign of intrinsic weakness that's coming through the market. That level is around 23,841. Considering that cues are even thinner today, will the bulls get adventurous? And will you see some pops here and there on individual shares? Let's see. But again, the FPI is selling. Even I was, Lata, quite surprised to see such a big sell number on Tuesday.
We thought it was thin trading.
Exactly. We thought, FPIs will not be around. They would have left for Christmas, but again, they managed to sell over 2,000 crores. Anyway, from a stock perspective or a sector perspective, the sector I'll watch out for today is going to be the capital market space because of the news that we got over the weekend. The parent company of Grow, the investment arm of Zerodha, and a couple of other investors, all of them put together, have pumped in about 238 million in the Metropolitan Stock Exchange, which is interesting. We know what's been happening to capital market stocks in any case, stocks like BSE, a lot of the broking stocks as well. It's a very red-hot part of the market. It's expected to, of course, compound at a very healthy clip over the next many years, not just today. But anyway, these stocks have also run up. However, there's this big announcement, and the people who are investing, they're existing capital market players. Grow, Zerodha, and a company called Share India, which is already listed. They're also looking at capital market, technology, services, etc. So watch this space. Let's see if there's any more excitement. And as I say that, by the way, we will be speaking with the officials in the management from Motilal Oswal. That's one of the best performing stocks of the year. So we're covering the capital market theme a little after market open. So keep it, keep tuned in because you'll hear more on this. Promises to be quite an interesting space to watch today and going over the next couple of days.
Oh, absolutely. Capital markets stocks, related stocks have done very well. Among the big gainers is also KFin.
Yeah.
I mean, just perhaps share transfers is what they do, more depository participant. But, they've all been doing extremely well. But let's take it to the expert. Joining us now, despite the Christmas holidays, is our good old friend, Arvin Sanger, Managing Partner at Geosphere Capital Management. Arvind, I don't know which part of the world you are. You are in that part of the world, perhaps, where Santa is still alive and kicking. He has, evaded our markets, but he is with you all in the US, I suppose. Has it been a great Christmas celebration there?
It has been. It has been a good year for the U.S. markets. It's been a good Christmas, and closing out the year hopefully on a good note. But it's. I was in India last week, so it was interesting hearing perspectives of Indian companies too.
Oh, okay. I'll come to those perspectives in just a bit. But the big question in everyone's mind is how long will this U.S. exceptionalism continue? I mean, do you see the dollar going on over the 108 mark? Do you see U.S. yields continuing to be where they are and therefore, attract money out of emerging markets? Or do you see any signs of peaking off on either the U.S. equities or the fixed income parameters?
Well, look, I'm a skeptic that anything is unidirectional and that the U.S. thing will keep rolling along. There's a lot of good news that's discarded. So it would not surprise me to see some negative surprises as President Trump comes into office and implements some of his tariffs. Clearly, he's going to be very favorable and from, in terms of regulatory relief. But there could be some negative surprises on the tariff front on, some unilateral actions that could surprise the market. So I think, but let me answer your question more fundamentally. I think what's going on in the U.S. from a technology standpoint, the whole AI boom, is clearly long-term extremely positive. Will there be short-term a little bit of hype and a little bit of pullback? Absolutely possible. So nothing goes in a straight line, but I think the U.S. is in a very strong position relative to the rest of the world. Now the question really becomes how much of that good news is in the market, and do the rest of the world markets, which have lagged badly, start to play catch up? I'm ambivalent on that, but as a value buyer, I'm looking a little bit outside the popular areas to see where opportunities lie.
Interesting, Arvind, and that was exactly my question to you. That for a market like India, I mean, we've had to deal with the fact that the US market is going so strong. And the second is that there are growth concerns here, a lot of chatter. Lata was talking about the RBI's latest projections for FY25, slightly lower. So when you say you're looking out for values, does India make the cut for you? And how are you looking at this market in 2025?
Well, India, unfortunately, is stuck in my opinion, in no man's land. It is a solid long-term growth story, but short-term valuations do not reflect the short-term growth. Short-term growth is quite tepid. Valuations are still reflecting a very, very strong, I think price earnings to growth in many, many sectors is at least a 2, if not more. That's not cheap by any measure. So I think India might just go through a time value correction before it becomes truly table-poundingly value-oriented. So right now we are, we're looking for long-term value, but we're looking for short-term pullback to really get table-pounding, as you've asked.
And how much of a pullback? I mean, just put some numbers at a market-wide level, and at what levels would you be comfortable to nibble in to this market?
Well, look, the 10% correction from here in the Nifty would give us a slightly larger correction in the mid caps, and that could get to be interesting. Alternatively, if the market just grinds around here for another quarter, and then it could become, from a time value standpoint. So, you can get there two ways, as I said. You can either get a pullback quickly, or you can get a time value correction. The reality is that there's so much liquidity in India that people are just throwing money into the market. But for us who look at it globally, if the growth is not there, the valuations need to correct.
Okay, yeah, it's a skewed distribution of savings in India as well, which is why you're seeing this investment in shares. But Arvind, as and when you get your levels, which are the sectors that interest you? Among the big performers in the year that's ending have been these EMS stocks, the Keynes, Dixon variety. Then there are this, as Surabhi was explaining just a few minutes before, the capital market-oriented stocks, KFin, Motilal Oswal, or even the mutual funds, all those stocks. And then, of course, the ones that didn't do well, the old leaders, the HDFC Bank, Reliance, Infosys, TCS, the big pillars of the Sensex and the Nifty have not done well. Where would you put your money?
Well, look, the financial sector is always kind of the lifeblood of the economy, right? So if the financial sector, whether it is NBFCs or it is some of the leading banks, like you mentioned, HDFC and others, I think there will be another leg in this cycle, which will provide opportunity, and they're not expensive by historical measures. So again, we need to see, some of the challenges kind of recede, and there could be opportunities there. In addition to that, I would say, do we look at stocks, something like cement? If you're going to have a capex cycle, obviously the capex cycle has been disappointing. Some of the, basic materials that are required in the capex cycle, power has done well, but I think there's been some pullback. Could there be opportunities there? So we're looking at, a lot of boring stuff, but even some of the consumption-related, but not necessarily, FMCGs have done badly, others have done badly. But I think some of the consumption-related stocks, to the extent that there are niche consumption plays that might get attractive. So these are some of the areas that we're looking at where there could be good opportunities.
Okay, I know you don't talk very stock-specific, but HDFC Bank has spent enough time in its, 1,500, 1,700 levels. When they last announced their numbers, they seem to have got their deposit growth and their mojo back, maintained their margins. Does a stock like that become a buy?
Absolutely. I mean, this is a high-quality franchise, high-quality bank, and clearly they've gone through a massive time value correction, and they had the loan-to-deposit problem as they were digesting HDFC Bank. I think those challenges are largely behind them, and now it becomes more a question of the financial sector itself starting to get a little bit of its mojo back, and in that case, HDFC Bank would be one of the stalwarts that we would definitely be looking for leadership.
Okay, so you're looking at banks, you're looking at sectors like cement, and maybe even consumption. Let me actually, wind up by asking for some more inputs on that last piece, consumption that you said, partially niche pockets, because that's where there's still a lot of concern. It's very hazy. A part of the market expects rural to do better, but then there's this whole cry about an urban slowdown, so on and so forth. So how would you look at playing Indian consumption in 2025?
Well, look, consumption is a very broad term. We've been fortunate to have played some of the, travel and leisure type of companies. Those have done very well, the hotel chains and what have you. So that part of the, I'm calling it consumption, but it's leisure consumption that has done very well. Do we look at, some of the areas like FMCG, maybe more the rural play? Maybe it is, some of the bigger ticket items, or is it some of the electronics consumption, some of the electronics retailers? There are niches, again, as I said, where we're looking at where does the risk reward get interesting, where there's been disappointment lately, but we might see signs of a turnaround, or does it become some of the, value retailers in tier 3 cities? Some of those have disappointed. So there's been a lot of disappointment in these sectors. And if we see signs of some of these sub-segments showing signs of life where the valuations are not, super stretched, then those would be areas we'd look at. I don't have an answer for you right now where I'm pounding the table, but I'm looking for signs to see where some of these might give us an opportunity.
Okay, we look forward to that and look forward to the next chat with you after after the next year is inaugurated, 2025. And from all of us here, Arvin Sanger, wish you a very bright and prosperous 2025.
Thank you, Lata, and same to you and the rest of the team at TV18.
Thank you very much. Okay, well, that's a promising chat, but they will look for levels. A time correction or a price correction is awaited. Let's tell you what we have lined up for you in terms of corporate interactions on the show today. Coming up at 8:35, we have Pankaj Podar of Cosmo First. He's joining us as the company launches its innovative paint protection films. At 9 a.m., we'll be joined by Gaurav Malhotra of Axis Capital to discuss key trends in the telecom sector. 9:20, Anand Shah of ICICI Pro AMC will be our market master for the day. 9:30 a.m., on the top gainers of 2024, the management of KEC International will be here to discuss what went right in 2024 and their outlook for 2025. Following that, another top gainer of 2024, Motilal Oswal Financial Services, will be chatting with us at 9:40 a.m. A little later, 9:50, Sandeep Ghosh of Birla Corp joins us to discuss their second half FY25 outlook. And towards the end of the show, in our special segment, It's the Economy, it's actually Outlook 2025, I will be in conversation with Devendra Pant of India Ratings and Aditi Nair of ICRA, both economists at rating agencies, for their outlook for the coming year.
All right, we have to get into a break, but after we come back, lots of stocks to track today. In our special Top 10 segment, we'll be looking at Ola Electric, Nalco, Panacea Biotech, Max Estates, EPAC Durable, Wellspun Corp, Sigal India, BPCL and Ramkey Infra possibly opening out in the green. Gland Pharma could actually open in the red today, and we'll tell you why in just a bit. Welcome back. Well, the cues across Asia, the markets that are trading have been largely positive, and many of them are managing some green. So let's see how we start off. But in the meantime, there you go. That's the implied open suggesting at least a 30-point pop at the open. Now, in the meantime, let's look at the stocks to track today. And our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning and I was about to say happy Monday. No, happy Thursday to all of you. So, Darshan, let's open with you. Ola Electric and Nalco. What's the news?
So Ola Electric's total store count now has increased to 4,000, with company adding more than 3,200 new stores. So good part about new stores is these new stores are coming with the service centers as well, as because company has been facing issues related to service. Some of the other launches include Move operating system 5 beta version, and features for this include group navigation and live location sharing. Also, company has launched limited edition of Ola S1 Pro Sona, and as per company, this limited edition of Ola S1 Pro Sona has been launched with real 24-karat gold-plated elements. So these are some of the launches that Ola Electric has done on 25th of December. For Nalco, company has signed lease deed for Utkal D and Utkal E blocks, and validity of this lease will be up to 2051. Remember, in April 2021, only company was granted lease for both these blocks. So what will these two blocks do, and basically what are the positive? First, coal production capacity will increase to 4 million ton per annum, and it will help company meet coal requirement of its captive power plant. So on the back of this, I'm going with green for both Ola Electric and Nalco.
Point taken, Sudarshan. I guess it's something most investors are familiar, that power is the biggest raw material for aluminium companies. It's even more expensive than the bauxite raw material that they pay for. And therefore, the coal blocks become extremely important for the in-house power for Nalco. And Ola, of course, a stock of interest always. Let's get to Vinny now. Vinny, you have a bunch of stocks on your radar?
Absolutely. So first, let me start with one of the pharma companies, Gland Pharma. Negative news flow coming in here because its arm, Cenexi, has gotten 10 observations from the French agency, that is ANSM. Now, 10 observations, the nature of these observations we'll get to know in the next few days, let's say a week, that we'll be watching out for. But 10 observations is a big number there. The inspection was carried out between 9th of December to 19th of December, and a bit of a negative, so let's expect some bit of a down move coming in for Gland Pharma. Then we have Panacea Biotech, that's in focus. Positive news flow coming in here after the company has received a letter of award from UNICEF, and this is for supplying 115 million doses of a bivalent oral polio vaccine. This is worth around 127 crore rupees, or US dollars is around $15 million, so keeping an eye on that one. Lastly, we have Max Estates, that's also in focus. Now, the company has acquired 3 floors in Max Towers by Max Tower Private Limited, which is a subsidiary of the company. So this is a related party transaction that is taking place between the company. It's at an arm's length price. It's valued at around 105 crore rupees. This acquisition is actually aligning the strategy that the companies have to consolidate the ownership of Max Tower with Max Tower Private Limited. So keeping an eye out on this one. Other than that, obviously they've additionally said that they are investing in the company there's an investment by the company in New York Life Insurance Company, which is in Gurugram. So keep an eye out on the stock today, expecting some bit of a positive move here.
Okay, all right, got that. Thanks very much, Vinny, for all of those stocks. Upasana is joining in. She's tracking a couple of names as well this morning. Upasana, tell us more.
Good morning. First up, let me start with EPAC Durable. The stock will be in focus as companies provided a clarification to the media reports stating that the China's TV company plans to buy 26% stake in company's subsidiary. Now, companies clarified that the business discussions are currently in the preliminary stage. Next up is Welspun Corp. Now, Saudi Arabia associated company, that is East Pipes Integrated, has announced a multi-contract sign-off with Saudi Real Estate Infra and Al Rasid Trading and Contracting Company. And mind you that the total order value is around 130 crores, which is mainly for manufacturing supply of steel pipes and coatings. Seagull India will also be in focus as one of the subsidiary of the company has executed concession agreement with NHAI for a project worth nearly 981 crores. Next up is BPCL. The company has emerged as the lowest bidder for 150 megawatt solar PV project from NTPC worth nearly about 756 crores. Now, the projected annual revenue for this project is around 100 crores by producing 400 million units of clean energy. And lastly, even Ramke Infra will be in focus as the company has received LOA worth rupees 215 crore from Hyderabad Metropolitan Supply and Sewage Board, which is mainly an operation and maintenance contract for a period of 5 years. So all in all these stocks will be in focus today on back of these news flows.
Oh, thanks a lot for that neat summary, Upasana. Let's quickly tell you what the stocks will be that will be in news. Just a summary. The stocks with positive news flow: Ola Electric, Nalco, Panacea Biotech, Max Estates, EPAC Durable, Welspun Corp, Seagull India, BPCL and Ramke Infra, while Gland Pharma is the only stock on our radar that is likely to open in the red. With that...
Okay, so that's the stock list for the morning. Let's now talk about commodities. We have Manisha joining in with a roundup of all the action. Manisha, good morning. Have your markets come back from the Christmas break? Many of the equity markets are still in holiday mood. But what's happening?
Okay. Commodity markets absolutely in a holiday mood, very thin trades. But, even within this, we've seen some strength come back in many of these commodities. So you have the crude oil prices gaining in the early Asian markets right now, as the U.S. data indicates a strong consumer trend. And also, India crude oil imports in November gained 2.6% on a year-on-year basis, and that's something that the markets were also reacting to. Gold also has seen some strength. The World Gold Council report that came in overnight says that the strong central bank demand is something that has continued for 2024 and will continue going forward in the years as well. Remember, gold has gained 27% in this year. It's headed for its best year since 2010, and that clearly has been a supportive factor. We've seen all-time highs for gold and silver in the Indian markets in this year. The other commodity that I want to put on table is the U.S. natural gas prices, gained up by 5% overnight. It's up by 70% in this year and is trading at December 2022 highs. So we are looking at stronger trends continuing in case of energy and precious metals, even as trades are thin.
My God, natural gas 70% this year. That's been completely outshining gold as well. Thank you for that, Manisha, for the inputs for this morning. But it's quite astounding, right? When you compare it across asset classes, I mean, Nifty has done its modest
to expect.
10% on Nifty, 70% on natural gas. So that's trading for you.
But that's geopolitics also. Yeah. Suddenly the supply of natural gas, which was from Russia, has become a scarce commodity. Well, with that, let's take a quick break, and thereafter we are going to be inviting Deepan Mehta of Elixir Equities to tell us how he's looking at the markets today and what will be his pick for the day. Welcome back. It's time for Bazaar Morning Call yet again. And it's that time of the morning when we are going to give you some advice on what you can pick and not pick in the coming trading day. Joining us for that is Deepan Mehta, Director at Elixir Equities. Good morning, Deepak. Pleasure having you and pleasure speaking to you after quite a while. Are you in buying mode at all in the first place?
Good morning, Lata, and the pleasure is all mine. It's a privilege to be on the show with you. Not yet in the buying zone at all. I think we are just waiting for the markets to settle down, and then we have another earnings season coming up. So it's always better to play a scene game where you see what the companies have to say, what the companies have reported, and then perhaps look at making some kind of an investment. I don't think that we are making any pre-season or pre-earnings release buying or trading call at all. Just want to wait and watch. I think that we have a correction underway, and that may go a little bit deeper and provide better opportunities.
Okay, but there are some of these, very respected stocks. Stocks like Reliance, HDFC, Infosys, TCS. The entire top 10 of the Nifty, or maybe at least the top 5, which haven't gone anywhere for the past year. I think some of them are in danger of ending in the red in 2024. You don't think it's time to start nibbling? When the opportunity comes, it may slip too soon. Not even an SIP in these stocks?
No, Lata, actually our focus is on a lot of the new listings which have happened in the last couple of years, where nice concept stocks have got listed, platform companies, interesting businesses. We want to focus on those companies where growth is still quite strong, but valuations have gone through the roof for whatever reason or so. So I think at correction, we want to buy such businesses, to name a few, companies like Zaggle Prepaid, Cartrade, which are all platform companies. Then you have RateGain Technologies and India Mart Intermesh. And then there are concept companies or one-of-a type companies like BLS International, that visa processing company, Media Assist, Sagility. So there are a whole host of companies, which are one of the kind, which are conceptual, which have fantastic business models, which can be scaled up very easily, great operating leverages, high ROIs. That's where we want to focus on. New generation businesses, not the Reliances and the Cements and the FMCGs. No, those are not something that you're looking at buying at all.
Okay, so new age businesses in the new year. That's an interesting way to look at it. Deepan, hi, and hope you had a great Christmas break. Thank you for being around as we're all set to wind down the year. Now, I want to know what you made of the weekend announcement on Metropolitan Stock Exchange. That was quite the chatter, right? With Grow and Zerodha, their respective individual arms, different arms putting some money in. And there is Share India as well that's putting some money in. What do you make of this development, and what bearing could it have on the listed capital market stocks, which have already had a phenomenal, fantastic year?
Yes, Abhi, good morning. I don't think it's going to impact the valuations of NSE or BSE for that matter. And it'll take a while to create liquidity, even if you have very influential investors. The market is much bigger than 3 or 4 brokerages. And sure, I think they may launch some products over there which are missing, and they may try and do that. But I'm not sure that's going to dent the volumes of BSE and NSE. Certainly the value of Metropolitan Stock Exchange will go up because if trading starts to pick up over there, and the option side, on the cash market side, value will get built. But I don't think there's space for a very vibrant and third exchange which would have many instruments traded on it. So from that, I don't think it's much of a threat.
And do you currently have investments in this space? Would you look at buying anything? What's your thought? Whether it's wealth managers or brokers or listed asset management companies, mutual fund companies, what do you still like in this entire basket, given the run-up and the valuations?
So see, we, as a measure of disclosure, we have a investment in 361, the wealth manager. But look, these are in a way a bit of a cyclical businesses. And although a lot of them are getting solid annuity revenues, the extra kicker in the earnings is coming because of a very vibrant and strong capital market. And the valuations also certainly have gone up, whether it's Nuvama or Anand Rathi or Prudent Corporate. All of them are trading at very, very rich valuations. And I think that you could have a downturn in the stock market, and that could certainly temporarily impact the earnings. And that may be a good entry point when there's a correction post slightly stagnant to flattish earnings.
Okay. Well, Deepan, we have a few more questions for you. Please stay on, but we want to invite our first guest, corporate guest of the morning, and we want to turn to you for some questions on that segment as well. The corporate on our radar is Cosmo First. It's the first management on the show today. The company has launched paint protection films for vehicle exteriors, and we have Pankaj Podar, the group CEO at Cosmo First, joining us. Pankaj, good morning, and thank you very much indeed for joining us. Christmas greetings to you. I mean, we just wanted to know, are you first off the block in this product, and therefore are you applicable to the entire, automobile industry? Is it two-wheelers only? I mean, is it only four-wheelers? And are all car companies your clients?
So very good morning. It is mainly meant for the four-wheeler industry premium cars as at this stage. But when we talk about some of the developed markets, in those markets, consumers have gone for even the mid-sized cars or low-end cars, because what it basically does is to protect the sheen of the car, protect from minor scratches that normally happen. And India is one market where we know that there's too much traffic and car is always susceptible to these damages. And these paint protection films definitely help in this. So initially, to begin with, we feel that this would be sold at the showrooms and the cars car detailing workshops. But in the times to come, we definitely feel that OEMs will also take interest in this, and they would like to introduce this right from day one.
Or only sticking to automobiles, will this PPF paint protection also be extended to homes? Do we see this broadening as a product for you?
Oh, definitely. This product is already used for the lifts within the buildings, or also for furniture. I mean, furniture, you can put PVC film as well, but this is a superior product to it because this is much more softer and can adapt to any shape. Therefore, this product can be used for furniture, can be used for lifts and any other metal surface. But the biggest application clearly is the car industry.
Okay, got that. Mr. Podar, now with the launch of this PPF product, I just want to know whether it changes anything in some of the earlier projections that you had given us, or whether this launch was already baked in. Because, I mean, you have told us that overall the company will look at a 20% revenue CAGR. You've also told us that the intent is to keep growing the specialty business, which is already, I think, 70% of your volumes in the first half of this year. So I'm guessing PPF is in that specialty segment, right? And just tell us the margins on this product, and what does it mean for your blended margins? How much volume are you looking to do in year one, year two? How do you scale it up, investments, all of that?
Yes, so see, we are building up the consumer segment within our film business. We already had a very strong industrial segment, which has been there for years, and now we are close to 75% specialty films within that segment. With window films was the first product that we brought into the consumer segment, and this is the second product that we are bringing. In the times to come, we are looking forward to add further products so that we make our consumer segment stronger. Obviously, Cosmo First also has pet care business as Ziggly, which is also into consumer segment. So we have a very strong industrial segment, and now we are trying to build our consumer segment as well.
And what is the current ratio, consumer and industrials, and how do the margins vary as well? And as you grow the consumer business, I'm trying to understand what that will mean for your blended margins, EBITDA margins.
Yes, so see, right now, obviously, most of the money that we make is within the films and the chemical space as such. Consumer is a new business. Ziggly was launched 3 years back, and it's scaling up nicely. And window films, we are about to do the commercial run for this product from March of this year. And paint protection films has just been launched. So these are all very recent things that we have done. So overall company size, this is not significant as of now, but over the years, this will become a sizable part of our total business, given the fact that we continue to grow in our B2B space as well. So both the businesses will continue to grow, and I'm sure consumer segment generally will give better margins once we stabilize them, once we scale up
Some
current
numbers, Mr. Podar, some numbers. I know it's in its initial stages, but it'll help us map the opportunity.
Yeah, just give us the revenue and numbers for next year.
Some revenue, some rough margin numbers to work with.
You see, the consumer business, including Zigbee and these window films as well as paint protection, is expected to do close to 100 crores next year.
Okay. And the margins would be double digits?
See, the gross margin in Zigbee business is quite decent. It is 40% plus. And same is the case with these films. But given that right now the marketing cost and overhead cost is still high, I think it may not start making money next year. It will take us at least a couple of years to start making money in these businesses.
Fair point. Now, finally, something investors will clearly want to know. Both the Jaipurias and you have sold stake in the company, albeit small amounts. Is there more to come, and what was the reason that you sold? You thought the price was very good?
Well, I think both of us had our own personal needs, and that basically led to this. And at this stage, I don't think so either he or I am looking to sell further stakes. Yes, these were small stakes, and both were meant for meeting our personal needs. And Mr. Jaipuri has never ever sold his stakes, so it's for the first time. In fact, he had been buying stock in the last couple of years, and right now he had some fund need, and therefore he sold some shares.
All right, point taken. A pleasure speaking with you, Pankaj, and hope you and everyone at Cosmo Films have a great 2025, a colourful 2025.
Thank you, and same to you guys and to the viewers.
Thank you. All right, we have to take a quick break on that note, and we're going to come back with our technical experts, Sudarshan Sukhani and Mitesh Thakkar, for some technical trades. And of course, Deepan is also with us.
Welcome back. So we've got a couple of fundamental cues on board, and the implied open is suggesting that we'll have a positive start. What about the technicals? Will the market manage to hold? That's the question. We have both, I think, Sudarshan and Mitesh with us this morning. Gentlemen, good to have you on. Thanks very much. Hope you enjoyed your Christmas break. So, Mitesh, let me open with you, because the problem for the market has been that it may start positive on these positive cues and the fact that, generally volumes are a little thin, but then the selling kicks in and we're unable to close above the 200 DMA. So what do you make of the structure? How would you approach the trade today?
Good morning, Sudhu. So I think the directional bias, if you look at the indicators and the averages, is on the negative side. Last 2 days, the 200 average has been, levels around those have been the near intraday high. So one, I think till we see the market sustain about 23,870, I'm not looking at a big up move starting. And most likely, this is a market which, after declining, is now getting into sideways contraction kind of a movement. So on the upside, 23,850, 870 is the zone to mark out for. And on the downside, I am looking at 23,600, 550 area.
Okay.
Maybe after a few days of consolidation, we might see another line, and which could see us retest the earlier closing lows of 23,350. So I think my view is slightly on the negative. The idea should be to try and sell around 23,800 plus levels, with a stop about 23,870, and try to take some profits on the short positions as we approach 23,600. On a break below that, fresh shorts can be looked at with the targets of 23,350.
Okay, thanks for that, Mitesh. Sudarshan, when I was preparing for today's early morning chat, the gossip I got, or at least the view I got from the market, is that today's Nifty expiry, and because there is very thin trading, traders will try and push up the index to 23,914, which is where it began the contract, because it will be easy to do those index management. Is there, therefore, a long trade?
Good morning, Lata. For the last 2 days, which means leaving yesterday, Monday and Tuesday, the Nifty moved into a very narrow range. Now, volatility is cyclical. If you go into a narrow range, eventually that leads to a significant breakout, either on the upside or the downside. Okay. To answer your question, whether there's a long trade, the long trade exists so far as the Nifty is above 23,600. Because we cannot tell the market when it will go up or when it will break out. So we just maintain a position. If our levels are broken, we understand it did not work. Otherwise, we stay long. That's the basic idea. Now, today, the markets can do anything. I have no idea how the expiry will end up. But the trade remains with 23,600 as your stop. Stay long.
Okay, fair enough. That helps. How do you play stock-wise? What are your stocks today, Sudarshan?
Well, Pharma is doing something. Pharma, we have discussed earlier, the Pharma does its own thing when the Nifty is subdued. Oro Pharma is a buying opportunity with a stop under 1245. Sun Pharma, another buy, stop under 1800. I have one intraday short, that is Ambuja Cement. That is, you consider an intraday short with a stop above 555, 555. And finally, Indigo is now getting its acts together. It had a decent correction. That correction seems to be getting over. So consider buying that stock with a stop under 45.60. Primarily, the thrust is on looking to buy.
Okay, all right. So in terms of individual stock ideas, working with more of the buy calls there. Got it. Gentlemen, stay on and we'll come back to you in a bit. Oh, Mitesh's stocks. Yes, we've not asked Mitesh about his stock ideas. So Mitesh, while the indices remain in a range, what about individual stock trades?
So we have a mix of buys and sell calls. So 2 buys and 2 sells. Lalpath Lab is a sell with a stop at 2961 for targets of 2850. While BSC Limited, there's a conditional sell. It's trading around those 54, 20, 30 ranges. 5400 is a pivot. So if it breaks that, sell with a stop at 5461 for a first target of 5270. And on the buying side is ITC with a stop at 473.5. Look for targets of 490. And Indigo or Interglobe Aviation, that's a buy with a stop below 45.60 for targets of 47.20.
Okay. Gentlemen, thanks a lot for those. We're going to come back to you for more advice closer to the market opening around 9:10. Thank you very much for this advice. We have to take a quick break. We will come back and while we will get you the pre-opening rates, we are also going to be inviting Gaurav Malhotra. He is the telecom expert, telecom stocks expert at Axis Capital. And he's going to tell us key trends, the impact of the recent trial recommendations on requesting telecom companies to sell all voice packages without data. All those lined up for you after this very quick break. Welcome back to this Bazaar live exchange coming to you from CNBC-TV18 Motilal Oswal studio. Well, we are still a few minutes away from the market opening, the pre-opening rates. Let's get the gift nifty, which will give you the implied open. I think it is still a little bit in the green, and Asian markets are also in the green. So the gift nifty is giving an implied open of plus 37 points. Deepan Mehta is still with us, and we'll get more guests shortly. Deepan, you know, we just heard the technical experts telling us that pharma is one sector that has stood out. Is there anything you would buy at this point in pharma, or even if you're watching any?
Yeah, I think 2024 has been very good for the pharma sector, and the companies that we are actually watching, looking to maybe invest at lower level, and some of them we already have an investment. Top of the mind, of course, is Sun Pharma. We truly appreciate its specialty product strategy, and that should scale up very well in 2025 and would lead to higher valuation or P multiple as well. A company we want to buy at a decline is Mankind Pharma. Truly, I would say, differentiated business model. A lot of revenues coming from domestic market, bit of a like of an FMCG type of a play, if I may say. And then again, there's a small company called Kaplan, which is now growing its exports to the US market, while it has a very strong presence in Latin America, which is highly profitable because of the kind of a complete end-to-end linkage which they have over there. So between in the pharma, these are the 3 companies we are looking at quite closely. But we are also studying Strides Pharma, another interesting company, a bit complicated, so it's taking a bit of a time. And there's a new listing coming within that space. What was earlier called Stellis, I think it's now called OneSource. That should get listed soon. That's a breakout from Strides Pharma. So that also could be an interesting company to keep on your watch list.
Okay,
so I'm so glad I asked you about pharma. That's a bunch of ideas.
That's interesting. So Strides, and it's ARM that's going to list soon. We'll keep that on our radars as well. Before we let you go, since we are on the subject of new listings, it's been a phenomenal year, Deepan, right? And some of these, the most recent ones, they were bouncing around. They were dancing on Tuesday ahead of the Christmas break. MobiKwik, for instance, was up 14-15%. And Sai, was also up and about. So quite a few of those stocks have been
Keynes just refuses to go down.
Which is no longer new. I mean, I'm talking about listings in the last six, seven months or so. So in this whole pack, what is it that you've liked? What is it that you're convinced of now that perhaps you would not shy away from? Any of the new listings, say, of the last 1 quarter or so?
Yeah, again, disclosure. We like Vari Energies a lot. In fact, that was our Diwali pick as well on your channel. And the way the company is scaling up and the kind of order book that it is building, I think is very impressive. At some point, it will become a complete end-to-end provider of the entire solar power equipment chain. And it's got a very solid consumer business as well, rooftop solar panels and stuff like that. But again, the stock has run up significantly. It got listed, I think, around 2,400. Which at that point in time also the IPO price was quite richly valued, and then it's now trading around 2,900 thereabout. I think if it comes down by 200-300 rupees or so, that could be a good entry point.
Okay. Thanks for that, Deepan. Just finally, I know you brushed away the old world stocks and are concentrating on next gen, which is how it should be. The old order should giveth way to the new. But is there anything in the old world in terms of, say, hotel stocks, in terms of, say, the trends, which didn't have a very great 2024, but was otherwise, a star performer? Anything in the smokestack stocks?
Well, not really. I think, nothing really comes to our mind when it comes to the traditional businesses. I would like to just give it a pass for this question, if you don't mind, Lata.
Fair enough. I wouldn't persist. That's an honest reply, actually. Thank you very much, Deepan. I hope we will speak to you before the new year. If we don't, have a brilliant 2025.
Thank you. Thank you, and same to you.
Thank you. All right. With that, we have another guest waiting by.
Yes, absolutely. And now it's time to turn the spotlight on the telecom space. The Telecom Regulatory Authority of India has recommended the introduction of voice and SMS-only packs for prepaid customers. The TRAI body says it will give consumers an option to pay for only the service they actually require, and they won't be forced to buy data because it usually comes bundled. I mean, as of now, most packs are bundled. That's one. Then, of course, we had the telecom subscriber data come out a couple of days back as well. So let's analyze all these trends with Gaurav Malhotra, Executive Director at Axis Capital. Gaurav, season's greetings. Thank you so much for joining in. So this was an interesting one. We were all talking about it, how it's a little unusual. We're not used to seeing too many tariff or, product packaging, pricing related recommendations from TRAI, but that's exactly what they've done. Now, let's see how the companies respond to it, whether they'll pay heed, because it's not a regulation. It's a suggestion. It's a nudge. What do you make of it? And which way would this go? Because if they do introduce, say, just a 99 rupee pure voice-only pack, will it lead to down trading?
Yeah, hi. Good morning, everyone. See, the way to think about is that, today Bharti has, say, around 10% of its revenues coming from 2G. Vodafone has, say, around 17-18% of the revenues coming from 2G subscribers. Right? So in the overall pie, this is a much smaller revenue. The second thing to note is that, this whole data bundling, which is happening for the entry-level voice, it's not too much of data, just like 1 GB, 2 GB of data, which is in today's context is quite minimal. So, and the third thing to understand is that, there are always ways and means to restructure these bundles, right? You can unbundle it, but it does not mean that you have to cut the price. Nowhere does it say that the mandate is to sort of take down the pricing or tariffs, right? So there are ways and means to restructure. And in the overall scheme of things, like I mentioned, from an overall revenue perspective, the salience is much, much lower for Bharti and to some extent to Vodafone Idea as well.
Okay. Just coming back in a minute to you, Gaurav, just looking at the rates as they open, my eyes actually taken to the rupee, 85.23 there. Remember, on Tuesday, the Reserve Bank allowed the index, allowed the currency to depreciate. So this usually you see them coming in after the first 5 pies or 10 pies. But on Tuesday, it went all the way from 85.1 to 85.2, where it ended from 0.10 to 0.20. And we didn't see too much of intervention by the Reserve Bank. Of course, we realized by end of the day that the FPI has indeed sold 2,500 crore worth of stocks. But today, the bang, the first opening is at around 85.23 levels. So clearly, we are going to see another bout of weakness. On the stock side itself, I mean, I'm not reading it simply because it's so totally confusing. It started off with a 1% downtick, and now it's down about 0.5. Sensex is down about 0.2. I think we should let the market settle. These are still wild rates, you would say?
I think, anyway, it's only 9 o'clock and, we're in a holiday mood market. So let's wait for things to
it's still a little
cool
crazy.
off. Yeah. But Gaurav, to go back to that point, so what you're essentially saying is that unbundling doesn't necessarily have to mean lower pricing. And that's fair. Let's see how, telecom companies respond to this. But overall, coming also to the other trend, which is, in general, some of the dual SIM or triple SIM sort of subscribers, they've been now disconnecting, which is why the subscriber numbers in the last couple of months, right? We've been seeing lower subscriber additions. What do you make of that trend? And in general, as we're looking at the next year as well, purely in terms of outlook, how does it look like for some of the bigger incumbents?
See, if you look at, this generally happens after every tariff hike. There is a sticker shock, there is some downtrading, there is some reduction of multi-SIMing, and which essentially happened this time as well, right? But if you look at the October data, you'll see that Bharti is back into a positive territory. And while Jio is continuing to see a negative addition number, but if you have to see from an active subscriber base, Jio's proportion of active subscriber base has gone up, say, from 92% in June to almost 97% in October. So there is some sort of a cleanup of the inactive subscribers, which is also happening. So these things tend to happen every time, and come, say, 4th, 5th month, it goes back to normalcy. We are seeing it going back to the trend levels, Bharti going up, BSNL additions are also sort of coming off now. So nothing much to sort of look at this from a longer term perspective.
Well, Gaurav, let's get down to brass tacks. What are your buys in the sector? I think when we last spoke to you in early December, you had a buy on Indus Towers. But anything else in the pack, including Indus, remains a buy?
No, so actually Indus is an add for us. We feel that, based on the valuation and the fact that, almost 30-40% of its incremental revenues is premised on Vodafone's network expansion, which is then contingent upon how much debt it manages to raise. So we, for now, on Indus, we are on the sidelines. Our top pick remains Bharti Airtel. In terms of execution, earnings momentum, it's doing very well. And with the kind of free cash flow generation, we also feel that, over a period of time, there is a possibility of some formalization of dividend policy, which could act as a further re-rating trigger.
Okay, so Bharti is the top pick. Now, what about tariffs in 2025? The market is hoping that maybe they'll be able to take on one more, but what is the possibility? I mean, the quantum, voice, data, what should we expect in the months ahead?
See, the thing is, I think so. The likelihood of tariff hike in calendar year 25 looks low. The last tariff hike, there was a gap of almost 2.5 years versus the earlier hike. We do feel that, going forward, the time gap will reduce between tariffs. But from 2.5 years, it's not going to come down to suddenly 1.5 years if the tariffs are to take place in this calendar. It may be, like, say, a couple of years kind of a gap. And in terms of the quantum, we feel that, given the transmission of from tariff to ARPU has been very strong this time, almost 80% plus for Bharti, we do feel that going forward, the industry won't have to take very high hikes to achieve its long-term stated goal of ARPU uptake. Maybe around 8-10% hike itself will be a good enough kind of a number for them to achieve, say, an 8 to 10% increase in their ARPU. So shorter gaps in tariffs, and also smaller hikes going forward.
So 8 to 10% increase in ARPU, do you see that happening in the new fiscal, if not the calendar year, but in the new fiscal? That's your assumption? That ARPUs could go up by?
So the ARPU will go up by 8 to 10%. They will be, for ARPU to go up, it's not just the tariff, right? There's also
absolutely, yeah.
happening. and that itself can take up your ARPU by 6-7%. And then there is some. So our base case today is that the tariff hike will probably happen sometime in 26, but it's very difficult to time these things. But our overall ARPU increase over the next 3 years is a CAGR of around 10%.
Got it. So CAGR of 10% ARPU increases because of various initiatives that the companies take, the subscriber addition, and obviously what they do on tariffs.
And the fact that all of us will watch Netflix and more.
We will not
Amazon.
stop consuming data. That's a given. On the last point on subscribers, once the impact of the previous round of tariff hikes is fully done, and all those who have these multiple duplicate SIMs, they finally disconnect. On subscriber addition, how do you see the battle between Jio and Bharti playing out in 2025, and who do you think will be ahead?
See, we continue to feel that Jio will be ahead in terms of the subscriber additions, just because of the strategy of keeping tariffs low on the Jio Bharat phone. So the entry-level Jio Bharat phone pricing is roughly around 120 rupees. The entry-level voice for Bharti is around 199 rupees. So Jio will get a higher proportion of those subscribers who are unable to sort of either move up to 4G, and they'll probably then start shifting to Jio. So at an aggregate level, we feel that Jio will continue to remain the leader in terms of subscriber additions.
Okay. Got that. Gaurav, thank you very much indeed for joining us and giving us a comprehensive understanding of the telecom space and the new TRAI recommendations. Only recommendations, can't be forced. Hope you have a brilliant 2025.
You too.
Thank you. So that was the telecom expert. Let's get back to markets. At the moment, a mild shade of green across all indexes, mid-cap, large caps, as well as the Nifty Bank. But that, of course, is still pre-opening rates. And now that they have steadied, let's get to our technical experts. Sudarshan and Mitesh are waiting by. Sudarshan, the top call at 9:10 would be?
That would be Sun Pharma. Consider buying Sun Pharma with a stop under 1800.
Okay, can I throw another question at you? Is there anything in stocks like Keynes, Gokuldas Exports, anything else, Indian Hotels? I'm just picking those stocks that have done extremely well this month, double-digit gains. Any recommendations over there?
Well, I track Indian Hotels, and I think it's an investment idea and a buying opportunity at every dip. So even if the gains have come, if you get a small dip, consider buying it.
Okay, that's helpful. I'm glad I asked. Thank you very much, Sudarshan, up until the next meeting. Mitesh, your 9:10 call?
Yeah, I'll go with the buy on ITC for targets of 490.
Okay, I was just looking at the Indian Hotels, share price appreciation over the last 1 year. What a phenomenal move, right? 100% up on Indian Hotels. And it's done even better if you extrapolate, go back further in time and then look at that chart.
Oh, it became a 1 lakh crore company this year.
Yeah.
I mean, in terms of market cap.
Yeah, absolutely. Mitesh, just very quickly, on the capital market related stocks, and there's some news, some new investors getting into Metropolitan Stock Exchange. So I'm just going back to the whole complex. Your Nuvama, your Edelweiss, Motilal Oswal, or even a BSE or MCX. Anything interesting in these charts? Any trades anywhere here?
Honestly, Sulbi, I think that all these stocks have had a good rally. They're showing signs of pullback, so not looking to buy into any of them right.
Okay. Can I slip in one, Mitesh? Are you looking at any of those new, e-commerce kind of listings like Paytm? It's hardly new. A good 2-year chart you have, and it's just gone from strength to strength in 2024. But of course, tapered off in the last 1 month or so. Is there a trade in stocks like these, Paytm, PB, fintech, etc.?
See, I think, for this thing, Paytm, I would be looking at some kind of a rally continuation if it starts getting past levels of 1020. Policy Bazaar also has done extremely well, or PB fintech, has given a pullback. I think a good support level comes in around 2030, 2020, and we are not very far away from that. So I think if it can hold that and give a reversal, I would then look at a 2200 kind of a target.
Oh, okay. All right. Got that, Mitesh. By the way, the pre-open rates have now finally settled, and we have some green on the screen. So there's about a 50-point up move on the Nifty, and the Bank Nifty looks like it will start even better. The move on the Bank Nifty right now is about 0.3%. A lot of the big boys like ICICI Bank They are on the top side of the screen. So let's see. The question is whether the bulls can build on this. That's where they've been faltering over the last couple of days. All right, Mitesh and Sudarshan, thanks very much for your calls. Let's now look at some of the stocks that could be interesting in today's trading session. We have Upasna joining in. She's tracking Cello World. Upasna, what's happening here?
Well, ICICI Securities has given a buy rating on this stock with a target price of 960 per share, which is an upside of nearly about 25% from the current market price. Now, the brokerage remains constructive on the stock as it thinks there are multiple growth tailwinds for the company in the year FY26. The brokerage says that the commencement of glassware unit of the company in Q2 FY25, which took place, may start contributing relatively towards company's revenues and earnings by Q1 FY26. It has also added that the integration of Wimplast with itself will allow to unlock synergy benefits in distribution. Now, company's investment in brand building, digital spends, QCom may start contributing materially in company's earnings in FY26 is what the brokerage has highlighted. And lastly, it believes that some growth spurts are visible in few pockets in Q3 FY25, as indicated by the management also, that they are indicating a demand recovery on ground. So all in all, that's the reason the stock will remain in focus today on back of this.
Thank you very much for that, Upasna. We'll take with both hands anyone who talks about demand recovery, because that has not been a very dominant theme in even in Q3 when we were expecting a lot of upsurge. But Gland Pharma has been in the news for slightly wrong reasons. Winnie is here to revise the reasons for us. Winnie, tell us all about Gland Pharma.
So yes, Gland Pharma's arm, that is Cenexi, has actually received 10 observations. This is from the French regulatory, that is ANSM. Now, obviously, this is a French agency. Let's keep in mind about that. Now, this is for Cenexi manufacturing facility, which was inspected between 9th of December to 19th of December. We do not know the nature of these observations, so we may wait out on that clarity on that term, that what is the nature. But 10 observations, quite a big number coming in on that front, though the company said that they will be working towards solving these issues that have come in from the French regulator. Other than that, what I want to highlight, in Q2 FY25, the revenue coming in from Cenexi was around 340 crore rupees. Total revenue of Gland Pharma was around 1,000 crores. So a decent amount comes in from the Cenexi side of the business. Management also spoke about how they want to focus on bringing this side of the business to break-even point by Q4 FY25 and EBITDA positive by FY26. So that may maybe see a delay. We should wait for clarity from that front. As well as the question also lies in terms of the long-term opportunity that the management spoke about from Cenexi in the European side of the countries. What will that happen to that front and what are we watching out for on that front from the company side in terms of commentary will be key factors to watch out for, but a negative today coming in for Gland Pharma right now.
Okay, all right. Vinny, thank you very much for that. Just looking at some additional stocks. Thanks, guys, very much for all of those. They're on our radar. Additionally, the ones that look interesting, some of our top 10 listings are looking very solid in the pre-open. Segal, for instance, which has a 94 crore rupee NHAI order. Panacea Biotech, they're taking their sort of vaccines. They're getting a big, large order, 5% up over there. Ola Electric, which has been adding its store count, trying to sort of provide better service with just more feet on the street, essentially. 3% up on that stock as well. And EPAC Durable also 5% higher. So watch out for these ones. There are top 10 list, and all of them are looking quite exciting. But just a couple of seconds and off we go.
Yep, looks like it would be a green start, and I'm still betting that the expiry pressures will be positive for the stocks. Yes, Nifty is starting at 23,800. We went there, did that, so about 0.3% higher for the Nifty and the Sensex. The Bank Nifty is the one that's up and away. The leadership is coming from the banking stocks. ICICI is the one that's on my radar, doing well at this point in time. But let me start with the top gainer. It's BPCL, about 1.35% higher. ICICI Bank, IndusInd Bank, Axis Bank, SBI, HDFC. Oh, they're all doing well. Okay, so today is quite clearly the morning banking day. I don't know if it's something in the RBI outlook, state of the economy outlook, that's cheering. There is a rate cut expected, but an initial rate cut is actually bank negative because a lot of their loans are linked to the repo rate, but their deposits will fall when they fall. So initially it's actually a little bit negative, but at the moment the banks are starting pretty high. The other stocks that are doing well, Maruti Suzuki is up about 0.5%, Bajaj Auto. So the auto stocks come in next. I can understand that. If there is a rate cut, these stocks should benefit. So Bajaj Auto and Maruti are up about 0.6. ITC, we got some buys on ITC. That's up about 0.4. Tech stocks, HCL Tech is up. Trent is up. Those are the main stocks that are in the green. I forgot auto stock M&M is also in the green. Among those in the red, Ultratech Cement, well, they've bought a very small company. That can't be much of a reason, but it's down about 0.4. HDFC Life is down about 0.4. Shriram Finance is down a bit. TCS, Ultratech Cement, I told you. Cipla, Tech Mahindra, Tata Consumer, those are the stocks that are slightly in the red. Tech stocks, one would have thought that they would benefit from the cheaper dollar, but of course they are going to lose because of other currencies, like for instance the euro losing. So if you take all the cross-country crosses, the IT companies are not necessarily benefiting because of the currency depreciation. Be that as it may, at the moment there is more green than red on the screen. Mid-caps, anything that stands out for you?
The index is quiet, but there's a lot that's going on beyond the index. Look at 361 Wealth Management. Remember, Deepan was talking about the stock. He actually likes it, but he's a little concerned about overall valuations. Stock is roaring as we speak, about 4% higher. Let me actually do a check on the others in this space as well. No, not so much. I mean, Motilal, for instance, is quiet. Edelweiss, nothing much is happening. Nuvama is up about 0.5%. BSE is not even 1 rupee higher. So this is a specific move on 361. It's not like the whole sector is moving as of now. So let's wait and watch and see what's going on. In terms of other newsmakers, Panacea, as I said, because of the news on their vaccines, which they've got a large export order, 5% up over there. EPAC Durables has acknowledged that indeed they are in talks with a Chinese company, and maybe there could be some strategic deal over there where that company comes in and takes a stake. Maybe. I mean, they've just acknowledged that they are talking. The market's already quite excited about that. Share India Securities is one of the entities, along with Grow and Zerodha, which has put money in Metropolitan Stock Exchange. Share India has put in about 60 crores. That stock is up about 3% on slightly thin volumes. Share India Securities market cap is around 6,300 crores at this point in time. There are other gainers, by the way. Look at Ola, 4.5% higher. And some of the recent listings, they're continuing their fanfare from Tuesday. International Gemological Institute, 5.5% up. Look at Zinca Logistics, 4% higher. Look at something like Sagility. I mean, what has happened to the stock?
I know, 5%.
5%. Remember, JP Morgan is looking at a price of 54. It's racing towards that target already with a phenomenal move in December. More names, Afcons, there's Borosil, plenty of action in the broader market beyond the mid-cap index, because the index itself is actually fairly quiet, not doing much. It's all about the Nifty and the Bank Nifty this morning.
Sagility is almost doubling in the month of listing itself.
Yeah,
I mean, it's a phenomenal performance by that stock. As well, as you said, IGI, the Gemological Institute, as well, having a great listing. So some of these new age stocks, or rather new listings, not new age, all of them, are having a good time at this point in time. All the banks are look at the banking index on 86%. No, but it's not only that. If you look down the list,
even tier 2 banks,
CSB, JNK, RBL, IDBI, Dhanlakshmi, all of them, very small banks, and all of them doing well. So I am somehow suspecting index management. Mutual funds, everybody is so financial stocks heavy. You have the last 3 days, and then, not too much of last 4 days, okay? 4 working days, and not too much of perhaps heft of trading, volume of trading. A good time perhaps for index management. But I would still think that they would use 30 and 31st for this. At the moment, banking stocks doing well. But with that backdrop of how the markets have opened and the news that the currency is continuing to weaken, 85.25 as we speak, let's invite our market master for the morning, Anand Shah, the head PMS and AIF investments at ICICI Prudential AMC, joins us. Anand, good morning, and thank you very much indeed for joining us. First up, are you all going into cash mode, or are you all in buy mode at this point in time, considering that the market's been kind of losing steam?
Hi, very good morning, and season's greetings to all of you in studio and to all the viewers of CNBC TV18. I think from markets perspective, we are well poised. I think we had a very, very strong earnings growth rate. You had a strong beta in the market, and obviously the alpha was also great, given you had a very wide spread. So unlike 2020, when there was a very narrow moves in the market on the way up, 2020 to 2024 and 21 to 24 has been a very broad based. So I think both the alpha and beta were great. What we are seeing here from here on is, I think, on a back of very strong earnings growth rate, the expectation from beta, the expectation from the earnings growth rate should be far more muted. And to that extent, market can deliver, but it cannot deliver what it has delivered over the last 4 years. Similarly, stock picking is becoming that much more difficult, but it would be the year 2025 and beyond would be year for more stock picking, more bottom up rather than top down. As we speak today, we still find selective ideas which we are putting it in the portfolio, and to that extent, there's no rush to create a lot of cash into the portfolio at this point.
Oh, you all are not into cash. How much would that be, anyways?
No, I think as a philosophy, we don't unnecessarily keep a lot of cash. Cash is only basically deploy or change the ideas from one sector to other. So philosophically, we don't.
Okay.
You know what? It seems like Santa is showing up a little late, but he's still showing up on the screen. I mean, these days, when you see this kind of large cap buying, you just think that, oh wow, it's a sigh of relief, right? That's what's been happening, at least for now. It's all the Bank Nifty and the Nifty this morning. Anand, hi. Good morning. Season's greetings, and we wish you a fantastic end of the year and an even better 2025. And before I talk about the market, actually, I want a theoretical question, what we were just debating. This whole business of year-end NAV management, does it still exist? Does it still happen? I mean, we're in the day and age of automatic trading, and a lot of people would be off on the new year. But you tell us, you're working with an asset manager for so long. What to expect in these last few days? Today's buying, for instance, this large cap buying that we're seeing, could it be related to so-called NAV management? What does it really mean?
No, I don't think so. I think as it is, the volumes really dry up, and given that a lot of our FI fund managers would be also on the leave, given that that's a much bigger thing outside India. I think on the thin volumes, you would invariably find the market move being either way is very strong. As it is, if you see the trend for the last few months, we have been more on domestic buying. You have been seeing SIP inflows, and to that extent, domestics have been generally the buyers. But the good news, and I'm saying it in a good fashion, that's good news that we had a FI selling, which made sure that the markets are more balanced. There were no wild moves on the way up because of the strong domestic buying, given there was compensating FI selling. It so happened that towards this week, the domestics continue to buy, but FI selling might be a little more.
Exactly. I think that could be one of the reasons that finally, after Christmas, a lot of the FPIs have finally decided to take their holiday, right? So when the domestic buying is coming in, it's not being offset by this wave of selling on a daily basis that we've gotten used to seeing.
Surabhi, it's not fair. You can't ask a mutual fund manager, are you, seeing NAV management? It is like asking Johnny, did you eat sugar? He's going to say, no, Papa. Okay, no, let's, I raised that question from my list. But Anand, more importantly, there has been a lot of buying, obviously, in the new age stocks, whether it's the Zaggles or the Zomatos, even the Paytms, the PB Fintech, which is not really new, but new age stocks. What's your sense there? They're all fairly valued. Would you still be interested in those kinds of stocks, the Swiggies, Olas, you name it?
I think within our team, we've been very closely watching this space. This is indeed not only new tech and others, but even in unlisted space, we've been seeing quite a lot of action among the retail investors investing heavily into unlisted also. So with my 24 years of experience, I can tell that, there is heightened interest in these companies. People are thinking that this is a very easy business. As I see, and if I speak about organized retailing alone, I think we have a war coming up there. It's not only the quick commerce guys. There are traditional modern retail traders, the Amazons and the Flipkarts also, who are getting onto the game of faster delivery. It's not quick commerce, but nevertheless, as I see from a customer's point of view, you're going to get value, you're going to get convenience. And we have seen this in airlines before, we have seen this in telecom before, where we actually got a better quality product, better quality service, at the same time lower price. And that meant really difficult times for the equity investors in those areas. And to that extent, it's a little scary where there has been this sort of heightened interest and no questioning on the valuations. When you don't question valuations, we have seen again in the past, in many instances, that's been a very bad news for many shareholders in those areas.
Okay. Let me come to the traditional bunch. That's the underperformer of the year. I mean, if you looked at the top stocks, there's every danger that Reliance, HDFC Bank, Asian Paints, etc., are going to end the year in the red, which would be, according to Hurma's, the first time since 2014 that some of these stocks would be ending in the red. What do you like in this smokestack in the old space?
I think we are looking at only the large caps, and that's why I said 2020. So run up to 2020, we had a very narrow rally into these names you spoke about, and a lot of money flew in those areas. 2020 to 2024, or precisely in last 4 years, it's been more broad-based. So actually, in the old economy also, we have had fabulous returns generated in even as simple as metals, in general manufacturing allied, the cap groups, industrial products. I think there has been a lot of action happening on particularly infrastructure and manufacturing side, and that's where the money is.
Okay. Anand, yeah, we do have you with us. I thought that feed is dropping. So Anand, now let's start boiling this down to what to do in this market in 2025. Like you're saying that there are a lot of moving parts in terms of international cues, etc. But if we talk about just keeping your head to the ground and looking at interesting opportunities, at least from a medium-term perspective, then what would get top billing from you? Would it be capex? Would it be manufacturing? Would it be pharma? And within that, if you could be more specific in terms of niche themes, a part of consumer, what are you looking at and what excites you as we enter the new year?
Indeed, quite a few ideas there. But before we come to that, I think from the investors' perspective, the expectation should be far more muted. We are entering the areas where we are talking about slowdown in India as well, but slowdown in Europe, slowdown in China, all this is having quite an impact on the earnings growth rate in general. And to that extent, in the next couple of years, we are actually tiding again, and we have to fight against the tide of slowdown in general and a lower earnings growth rate, unlike the last few years. Coming to areas, I think you're always speaking about banking, and banking has been struggling, but when we see risk reward, while there are initial fears of NPAs, especially in the unsecured area, I think still the banks gets our attention at this point of time, given the relative valuations versus ROEs that they will generate. Outside that, select manufacturing is what we continue to like. It will be more bottom-up than top-down. Within consumption, we have been more keen on services. We like more of telecom and more of airlines and travel. That's where incremental spending is happening from the household. The products we've been consuming enough and more. The penetration game might be left in few categories, but otherwise it will be a low growth area. What within the consumption space we believe will grow faster would be the services.
Okay. So when you say services, that would be largely, I'm guessing you're saying travel, hospitality. So within consumer, you'll stick to that. Anything else? But for instance, if we look at throwback to this year that's closing out, for instance, Trent was an outlier. We kept talking about how there's pain at the bottom end and how sort of lower end consumption is not picking up. But look at the Zudio story and look at what that did to Trent. So any thoughts beyond this retailing? And that also starts bringing in some of the newer age stocks, right? Your Zomatos and Swiggies and Nykas. Consumption is becoming far broader than what it traditionally used to be, the traditional staples. So anything beyond the travel and the hospitality side in consumer?
Indeed, I think organized retail is another area which will grow faster than the consumption itself, right? So while the Indians might be continuing to consume the same stuff, they're consuming it differently, or in the way they're purchasing it differently. So organized retail has been there now for more than 2 decades, and we've been shifting the way we are purchasing goods. And no doubt that organized retail can also or will also grow faster than the overall consumption pack. Separately, consumption of financial services. I think the insurance, the asset management company, the broking companies, the capital marketplace, those are the other services which the Indian household will consume more. I think healthcare, particularly the diagnostics, these are the areas where again the penetration will increase. The amount of money an Indian household will spend on healthcare services also would increase. So whole gamut. I think education is another one. There might not be many listed players there, but that's also the areas where the household is spending more for the kids' education.
Okay, just very quickly, Anand, consumer discretionary or consumer FMCG, mass consumption?
No, I think we've been underweight both consumption discretionary as well as FMCG. I think they were a big beneficiaries of China exporting deflation. I think we had a very, very long period of time, very, very benign commodity prices, which allowed them to increase penetration at the same time, not pass on too much inflation to the consumer. I think that's changed. If you see last 4 years, the end product inflation is very high and the consumers are struggling. I think this is happening at the same time, and to that extent, I see, and the margins are at all-time high for many of these. So I think this combination of things we believe will not augur well for the earnings growth rate in this area.
Got it.
Muted top-line growth rate, muted earnings growth rate, and that's why we've been underweight this area.
All right. Got that. Thank you very much. We hope, of course, things change for the consumer and from the consumer as well. Anand Shah, pleasure speaking with you. Have a brilliant 2025.
Thank you so much.
All right, Anand, with that, let's move on. And just a quick pit stop to check the market screen before we introduce our next guest. And the market screen is interesting. It's all about the large caps, but the mid-cap index has slipped into the negative. So interesting trends playing out. The advanced decline ratio is still positive, but at a headline level, the mid-cap index is showing a tinge of red right now. So that's the index. Let's put up the advanced decline ratio as well, because that's still okay. You've got about, over 1,200 stocks that are still advancing. But yeah.
Habits die hard. Rupees 85.26.
That's another trajectory. It's just not stopping. It's moving so quickly.
Now I think the Reserve Bank is not stepping in. Otherwise, we used to see them break after the first 5 or as it moves towards a round number like 30. But now I think they're letting it drift.
They're letting it go down. Let's see. Lots for the money markets to navigate in 2025 as well once Donald Trump takes office. More on that later. Right now, we're talking about domestic cues and domestic companies. And one company that's had a phenomenal year is KEC International. It is one of the top gainers of 2024. The stock has surged a little over 95% in the year that's just now wrapping up. And we've been speaking to Mr. Kejriwal through the year. He's been telling us about the robust order book and the strong outlook. In fact, the company announced orders of just over 1,000 crores in the last few days as well. Mr. Kejriwal, thank you so much for joining in. Season's greetings to you. Wish you a phenomenal end to what's been a good year, I believe, for KEC International. So let's actually start there. We've been speaking about this, and I remember in the last conversation, you were telling us how the ordering trends are very, very strong indeed, and you're seeing a big pickup ahead. Is this likely to continue into the last quarter of the year as well? And where do you see the maximum traction when we talk about your order book growth target and your revenue targets? You've been talking about 15 to 20% growth. Which sectors will give you the biggest kicker?
Good morning, Smurvi, and season's greeting to you and to your viewers. I think the answer is very clear. It's transmission and distribution. So this year, if you look at our order intake, we got orders of roughly around 17,500 or so. And more than 60%, in fact, 70% is from the transmission business. So very clearly, we are seeing a huge traction in the transmission business, obviously on account of the thrust of the government on new renewables. It's both in India, surprisingly what it's in India, as well as for us in the Middle East. So if you look at our transmission order intake for the year, it's only 40% India. 60% is from the international market.
Okay. Well, Vimal, good morning. Thank you very much for joining us. Well, I want to quote the previous sentences we got from you. you said have never seen such strong ordering activity in this sector and see further requirement. So at that time, you gave us a forecast, or rather a guidance of 15% revenue growth and I think 7.5% EBITDA margin. Would you want to improve upon that, looking at the optimism in the sector?
Morning, Lata, and good to interact with you after such a long time.
Thank you.
I think on the revenue guidance, we are still where we are at 15%, and I think we will also stick to 15% for the next year. Revenue and margin, I think we should be there. I'm not very sure because there has been a slight, delay in some executions on the newer projects. But I think we should be there. But we have also said that next year we should be above 9%. So I think we are pretty happy with what we are seeing. And one question which was there was on Q4. I think clearly there will be a lot of orders which will come in Q4. We already have an order in L1 of more than 5,000 crores. So I think this trend will clearly continue in Q4 as well as in Q1.
Execution slow in some areas, you said. Is this government related? Because when you look at the fiscal numbers, which is what I do for a living, the capex has not been as strong as the budget estimates gave us. Is that the reason why things are not as fast as you would like them to be?
So that is the reason more for the order intake not picking up in our civil business. Okay, we were targeting, say, let's say around 5,000 crores of order intake in civil. We are, I think, around 2,000 or so. Largely because there's hardly any public capex except for on the T&D side, which is not as much government dependent as what Power Grid does and other people do. On the public space, I have not seen much spending happening in probably any area. So that's one reason for the order intake slowdown on the civil side, which is compensated by the T&D order intake. But on the execution side, I think the biggest challenge which we are still seeing is the shortage of manpower. I think we're still short of 4,000 to 5,000 people across our businesses. Okay, so that's one problem. When I say manpower, it's basically at the technician level. It would be fitters and carpenters and masons and all those people.
Oh, this is very interesting. I think we should make this a national debate. I mean, one would have thought that we would be labor surplus. So clearly there are skill deficiencies in some pockets, labor not of the kind you would want. That's very interesting, Vimal. We'll try and make that a national debate. But now to come back to the more micro point of your Rupur plant, change of government in Bangladesh. How is that progressing? Is it progressing at all? Any worries? Would it be cancelled?
No, we are not directly associated with the plant. We are doing 2 transmission lines there and work is going on. Okay. So as far as we are concerned on the transmission side, we have not been impacted. But Lata, coming back to your earlier point, it's not a question of skill deficiency. It's a question of people not wanting to leave their houses and come and work. Okay. It's an issue. And we have been seeing this right from the day the COVID happened, when you saw the sight of people walking on the roads and all that. So I think that fear is still there in people, and with your Manrega, etc., people do feel that, why should we go out and, work somewhere else where I can get at least a part of it sitting at home or doing a farm work, etc. So I think it's a question of how do we motivate people to leave their homes and come and work on these projects.
Interesting. I mean, those are other challenges that management will have to navigate across the sector.
Actually, it's not Vimal. I heard this even from L&T, not the official spokesman on the channel. But there are people who are complaining that even those who are there are not that motivated. We try to give them pep talk to be more productive. And there is a shortage of
a labour issue, perhaps. Okay. But just to get back to some of the key numbers, Mr. Kejriwal, the last time we met, the numbers we had was order book at around 34,088 crores, and you were L1 in over 8,000 crores of orders. So now as we're almost closing out the year, where does the order book stand? The actual one and the one where, you were already L1?
So the numbers are more or less, the order book remains there it is, because after the last, when we spoke, we have had execution for 2 months. Unfortunately, we have not had too many order conversions from that day, but I think we are expecting some more to come in. So order book plus L1 right now is at 40,000 crores. And our expectation is that the order intake for the year, which is around 17,400 till now, will touch the projected 25,000 crores by March end.
Okay, so 25,000 crores of additional orders by March end and 40,000 crores of order book, including the L1 orders. Now, got that. Mr. Kejriwal, the power is, really moving well for you. We've spoken about T&D. What about railways? Because I remember in the earlier part of the year, that was where you had a bit of a concern. Things were not moving. But that's also a segment that you've been looking at very actively. What is happening with the railways now? And what do you expect in the coming quarter, Q4?
So railway still remains a concern. I think execution is still a problem on the conventional railway side, where blocks, etc., are becoming a big issue. However, what has changed since last time is that there have been a large number of Kavach tenders which have been issued, and government has started awarding them, especially on the loco side and the infra side. So I think that part, which is right now not there in our order book beyond what we were already doing, I think those orders will start coming in maybe this month itself they're talking, or maybe next month we should get some of so that's the good part of railways, where the Kavach orders and some more technology related projects are coming up. The conventional
and how would the margins be, sir? On Kavach, as and when these orders come in, how are the margins?
Kavach would be slightly higher than the conventional margins because it's a technology product. It would surely be around double digit or so. The challenge remains on the conventional and also some part on the cash flows. I think railways has been having some cash flow issues, and I think that's a challenge which is also slowing down some execution.
Okay. Well, we leave it at that, Vimal. Thank you very much on behalf of your investors for giving them such a glorious year. And here's wishing you that 2025 is equally or, in fact, more successful. Okay, we have to take a break on that note. We've been updating you on the markets, and it's, as Surabhi has been pointing out, it's been so far a good day, at least for the big stocks. Mid-caps a tad in the red. We're going to take a break and come back with another winner of 2024, none other than Motilal Oswal Financial Services. Welcome back. Like we've been telling you, big stocks in the green at this point in time, big indexes, especially the Bank Nifty. Mid-caps just dibbly-dobbly, a little bit in the red. But we are in that mood to look at the winners of 2024. Motilal Oswal Financial Services is one of the top gainers of 2024. The stock has surged more than 190% in 2024. In fact, the broking company Investec is positive on Motilal Oswal, and they believe that all operating businesses are well positioned and are gaining market share. To discuss more on this, we have with us Shalibhadra Shah, the Chief Financial Officer at Motilal Oswal. I don't know if I'm pronouncing your name properly. Feel free to correct me. But I just wanted to know, what are the trends that y'all are getting? Do you think you can continue with this kind of customer acquisition and market share growth? Is the visibility clear?
Good morning, Lata, and my name is correctly pronounced. Thank you. And I think it's what we have seen first half of this year. It's an all-round performance, in terms of our whether the brokerage business or our asset management business, our private wealth business, alternate business, investment banking, and so on. And there is a very healthy trend in the industry overall. If you see the run rates of client addition, still monthly demand account continues to be very strong at almost about 3.5 to 4 million demand accounts getting added in the industry. Mutual fund SIP book has been very, very strong at almost about 25,000 crores a month. Even the overall folio addition has been strong. Primary issuances have been strong. So we are seeing a very, very strong retailization story playing out. And in fact, with the entire financialization of savings happening very sharply, which has actually moved towards the equity culture, we are very optimistic on the overall financialization theme to play out for next few years. And in terms of even the client additions and the assets, I think we expect strong asset addition, client addition, to the momentum to continue in the future as well.
No, absolutely. Shailbhadra, we hear it from Mr. Ramdev Agrawal himself, right? He's so optimistic on the capital market segment, has been for a while. And obviously, I mean, he sees that in his own business. I'm sure sort of that's where it's coming from. But let me ask you this before we move on to other issues. It's been a phenomenal year so far in terms of, average daily turnover, client additions, etc. But what do you forecast in terms of these trends, say in Q4? The market's now entered a consolidation phase. The first quarter of consolidation was this October, November, December period. If the market continues to be in a time correction, I'm not even talking about a price correction right now, but if this continues, then what is the pace of, client additions, turnover? What can you forecast for, say, Q4 or, say, the second half of this year?
Yeah. While there is a bit of consolidation in the equity markets, but there is a lot of traction, on some of our businesses like asset management, private wealth management, and on. Because, see, again, what we are looking at is very healthy trends where the performance is there. Because to take an example, our asset management business, almost the entire AUM has outperformed the market, right? And the industry flows, we are getting a very large pie of that, which has led to even improvement in our market share and flows trend. So we expect a lot of traction built in our asset management business. Even on the private wealth business, we have very healthy pipeline of, the family offices that have added, the kind of product innovation we have done, a lot of senior talent we continue to add in that business, advisors we are continuously adding. So these businesses actually continue to see the benefit of even the strong equity culture. So flow run rates have been very sharp. So we believe H2 will be very strong flow run rate in these businesses going. This broking business again is of course is a function of markets, but again what we are seeing there also is a lot of focus on the distribution business where we have deepened the modes to cross-sell to the brokerage clients. And we see good momentum across these segments.
So, let me ask you, if at all, if you can give a numerical sort of a projection. We take your point completely. What you're saying is wealth management is really offsetting any kind of cyclicality which the broking business will throw in, which is the nature of that business, right? And wealth has been doing very well. It's a large business now for Motilal Oswal. Some estimates on the street say that you can deliver a PAT CAGR of 31% between FY24 and 27 and an ROE of 25%. These are the kind of estimates that analysts are working with right now. Do they seem fair? You tell us, given the strength of the other businesses, on a CAGR basis, top line and say PAT CAGR, what can we expect?
See, I think overall, if we look at the growth in last 2-3 years, the PAT growth has been almost about 40%, right? CAGR over last 2-3 years. And even this financial year, first half, we've grown at 47% in the first half in terms of the profit growth. So we expect a strong growth trajectory because the pipeline of business I was talking is very heavy. So we expect this trend for next 2-3 years to deliver stronger profit performance. So again, we can't predict an exact number, but I think as I was talking, the momentum is very, very strong. And even last decade, we have delivered, 34% operating profit performance, rest aside, keeping the treasury book aside. So we expect meaningful momentum to continue for next 2-3 years of trend given
there is, Shailbhadra, there is one always risk factor that is mentioned everywhere. Past performance is not a guarantee of future performance. Okay, let me just twist the question a bit. We've seen Grow and Zerodha just take away business from traditional brokerage houses, and that's led a traditional brokerage house like Angel to actually launch a new service. So from y'all, will we see any such fresh launches, or will we see any demerger of business to take advantage of the mood of the market? For instance, like housing loans or something like that. Will we see another listing?
So at this juncture, as of now, we have no plans to list business because we see this as entirely one synergistic business opportunity, whether it is our brokerage business or our asset management or private wealth or investment banking or institutional equity, alternate business. All of these plays a very strong synergy within themselves. And, the capital needs for this business are met by us by a very strong treasury book, because that's a very differentiated twin model business of operating business and a treasury book which takes care of all our capital needs for each of the operating business. So unless we decide to dilute, we have no plans to actually demerge these businesses, because these are very synergistic opportunities within themselves.
Got that. We'll let you go. We have still a lot more questions, but time is short. We will touch base with you in the new year. Thank you very much, Shalibhadra. Have a great 2025.
Thank you. Thank you.
All right. We've been discussing about outlook with everyone who's come in, but let's also look at the year that was. In our year-ender series, Nigel is looking at the cement sector. It witnessed a significant amount of consolidation. Nigel, tell us, how would you decode the year that was and how things will pan out in 2025?
Well, the consolidation theme continued to play out in 2024, with 40 million tons of capacity folding up into the hands of Adani Cement and UltraTech. And over the years, Adani's foray into the cement space with a massive war chest has acted as a catalyst, triggering the race for capacity share, which has increased the competitive intensity. The top 5 players now account for more than 60% of the market. That compares with only around 40% 7 years back. The question is, will consolidation slow down from here on? Remember, the recent deals have been concluded at around $100 per ton mark. That's closer to replacement cost. Well, ICICI Securities says that cement majors like Ambuja as well as UltraTech, they have exhausted most of their cash reserves post the recent acquisitions. They add, except for a few NCLT cases, they believe that low-cost acquisitions are largely behind. And now the potential deals may command a significant premium to the replacement cost. That could make them much more unattractive on borrowed funds at low cement prices. Well, the pain point is elevated competitive intensity has led cement prices plunging to 4-year lows. Demand as well has been plagued by general and state elections, heavy rainfall in few regions of South India, the construction ban in NCR region, and also labor unavailability in various parts of the country. But part of the street is optimistic that cement sector has hit rock bottom and it's ready to fight back. Well, Jeffrey says that dealers suggest that price declines have bottomed out, and now the industry is attempting price increases every month. They believe that the recent increase in industry consolidation further supports a case of revival in cement prices. Though sustainability of the price hikes will depend on what the leaders prefer, volume or price increases. Well, Goldman says that their channel checks suggest that demand is recovering, though on a low base. With the expected pickup in government capex, rural demand is likely to improve, and urban real estate market, well, that's doing well as well. So they expect that cement demand will grow by around 7% in FY26. On the profitability aspect, well, INCRED says that lower fuel cost, improvement in volumes, that could lift EBITDA per ton by around 160 rupees on a sequential basis. Though they admit on a year-on-year basis, it will still be down by around 200 rupees per ton. Axis Capital says that cement spreads are on recovery path. It's at the highest levels we have seen since January 2024. They add that spot spreads are now 12% higher sequentially, though it's still down by close to around 5% on a year-on-year basis. So 2024 has been a brittle one, both on pricing and demand. The hope is that 2025 cement will be in far better shape and it could deliver a far steadier performance.
Well, that is what the market is sort of hoping for and perhaps expecting. That was Nigel there with the sector dynamics. So let's ask our next guest if these hopes will actually come through or not. Sandeep Ghosh, Managing Director and CEO at Birla Corporation, is with us now. Thank you very much for joining in, Mr. Ghosh, and season's greetings to you as well. So let me just start there, right? If you look at broker estimates, as Nigel was summing up many of them, the expectation is that some of the recent price hikes that have been announced just in the last couple of weeks, that maybe they will hold. They'll not have to be rolled back. You tell us, what are you seeing around you? And, have you taken any price hikes in this quarter? And what do you expect on pricing over the next, say, couple of fortnights?
Thank you, and season's greeting to you as well. I tend to agree a lot with Nigel's assessment, which he has kind of, I think, consolidated the industry, the broker's overview, and the channel checks. I think this is more balanced than what we were hearing earlier when there was undue, I think, optimism to think that there'll be a huge hockey stick in the end of third quarter and the fourth quarter, etc. So that'll change. I think now people are taking a much more realistic view. Only where I have first let me answer your question about price increases. Yes, the prices have moved up by and large in most regions, except so much in the south. And the increase is modest though. I would place the increase between 5 to 7 rupees a bag, which is say around 150 rupees a ton. So that is there, and I do expect it to be to hold on, and especially things should pick up further in January once both the cold recedes, and then there is also this whole impact in the north of what they call the Malmas. During mid-December to mid-January, there are no new constructions, particularly in the individual home sector, which start. So that should change, but as yet, I don't see a run in the demand, but certainly the current momentum will hold. And again, to complete the point, I am particularly looking at the budget at the end of next month, which is hardly a month away. I think that is going to impact the sector a lot because the interim budget, though it made announcements, some of it did not materialize, translate into actual impact on the ground because of elections and various other factors in between. But if the new budget comes in and if there is actually a thrust from the government, as well as most of the critical state governments in place, they would be, they'll be fully in the saddle by then. And by being fully in the saddle is essentially when they start sanctioning expenditure, releasing funds. The earlier, priority of diverting funds to pure welfare schemes, that'll recede. And so there'll be more expenditure on the development front, especially in rural developments. All those augur well. Where I have a slight difference from Nigel's analysis or everybody, I think the impact of consolidation is highly overstated. I personally am a great believer in the demand factor. Unless demand picks up, nothing else holds. And for that, capacity utilization of the industry, that is critical. So the pricing power, which people talk of giants, etc., I think that is largely exaggerated. So once your demand picks up, goes to higher 70s, that's when you really see a buoyancy and attraction in prices. And whether that happens or not, we have to wait and watch. The large players, again, I think instead of exercising pricing power, they will be greatly focused on costs. Especially one of the large players is, focusing a great deal on the supply chain, doing major disruptive, changes, moves in the supply chain because they have, and that is as per their stated policy. So you will see a lot more focus coming in on cost savings rather than taking huge price increases. That's my overall assessment.
Oh, that's an excellent.
FY26 looks better than what FY25 and FY24 second half was.
Okay. So that's an excellent overview of what is to come. You've touched on all the major themes that I was wanting to ask you on. But just to needle point things a little more, do you get maximum demand from government capex, that is bridges and infrastructure? Or I was under the impression that a bulk of the demand actually comes from housing. And real estate, urban real estate at least, was doing reasonably well in the year gone by. Can you just tell us, where do you see
urban real
the major
estate
demand?
Urban real estate is highly overstated. That's a very small significant. The two major components of cement demand, you're right, is 40% approximately comes from the infra, or what is in our terminology we call the non-trade segment. okay, which is B2B, but B2B is essentially large infra investment, and some of it is large projects, could be real estate, etc. But the real driver of cement business still in our country is what is called the individual home builder. And individual home builders comprise largely rural demand. And in rural demand, again, you have the infrastructure component, something like the PMAY, Pradhan Mantri Awas Yojana. That was a huge driver for many years. Okay. And then the rural infra, which is where the state governments have to spend money. And much of these things happen really in tandem and between the center and the state, because as you know, many of the schemes, the central schemes have a state contribution. So until unless the state put an equal amount of money, the center doesn't put in their bit. And so here, quote unquote, I'm not making a political statement, but the so-called double engine comes into play.
Okay. Yeah, no, we had a very good report from the Reserve Bank on state finances, and they have also highlighted that the money that's coming from the center comes with a lot of conditions, and that the central schemes also crowd out a lot of independent spending by the states. So there is something to say even for the state government's willingness but inability to spend. Be that as it may, do you expect that in the coming year, you are going to see, do you see bids, tenders, etc. of state government spend?
First of all, infra, the central government spend will be really big ticket.
Okay.
Okay. And not as much as I would think the state government, because as you know...
No, my big worry is, the center...
If I just complete this.
Yeah.
A lot of the state government spends, as you and I know, have now been diverted to welfare funds. Okay. So some of the state governments are really cash trapped.
Okay.
Okay, so that becomes a constraint. So when you're talking about that non-trade infra segment, that will be driven largely by the big central projects.
Sure. So, Mr. Ghosh, let's wind it down. We've understood the macro positioning of the sector very beautifully, thanks to you. Let's wind it down with an outlook specifically for Birla Corp. You had told us that the second half will be better, and you were expecting a recovery in EBITDA per ton. I think first half you were at 532 as per the numbers that I have with me. So what would be EBITDA per ton, second half, the recovery? And for overall, I mean, for FY25, what would the picture be on volumes?
You've got me at a very wrong time, because we are in the silent period. In any case, we don't talk about company-specific things on, on a fora like this. But we are not changing any of our guidance, which we have given earlier.
Okay. All right. So I'll just reiterate for the benefit of our viewers. The guidance did say that, the financials in the EBITDA per ton will improve in the second half, and, it should get better from here on. Thank you very much, Mr. Ghosh, for joining in. This was a very, very helpful conversation. It really gave us a wonderful broad context to the sector. And here's hoping indeed that FY26 and calendar year 25 is better for the cement space. And season's greetings. And once again, very happy new year to you as well. Well, with that, we have to take a very quick break. Come back on the other side. We'll take stock of the market once again and also look at what's happening in commodities. We'll have Manisha joining in with the latest.
Welcome back. The markets have not been able to hold on to their early morning gains. A bit of profit taking coming in, and now the Sensex and Nifty are also in flat terrain. May dip into the red any moment now. Mitesh Thakkar joins us precisely at this point to give us some advice. Mitesh, any sell call now, or is it a buy on dips, stocks?
Morning again, Lata. I think early in the morning also my view was to sell on rallies, and I think the 200 average, which is at about 23,870, I think came into play. We got a high of 23,850. I think that was the selling zone, so it's working well. Right now I have two sell calls. One is Bombay Stock Exchange or BSE. I think it's had a very good rally and now is showing first signs of profit booking. So keep a stop about 54.80 and look for a target of around 5200 or below. And the other one is JSW Energy, which is a conditional sell. There's a support pivot at about 640, 639. So sell below 639 with a stop at about 655 for targets of roughly around 610.
Okay. Thank you very much, Mitesh, for that. And we will touch base with you, of course, later on in the afternoon. With that, let's shift focus to the commodity market space. And Manisha is actually hitting the nail on the head. She's trying to wake us up all with a cup of coffee. Tell us,
Well,
Manisha.
absolutely. You know, Lata, next week you would want it more because we are working on 31st and 1st as well, while most international markets are not. But for India, well, yes, the demand is expected to go higher. And if you look at the prices in this year, well, we've done exceptionally well for the producers, of course, not for consumers. So the Arabica coffee prices are trading near record highs at around $3.2 a pound. This is the prices that are trading in today. And the all-time highs also have been seen in the month of December at $3.5 a pound. That was recorded on December of 10th. So if you look at the prices on where they are, we've seen 70% of gains in case of Arabica prices. This is the highest that we've seen in 1977. And if you don't drink Arabica, but Robusta is a coffee of your choice, well, there's no respite there as well, because the Robusta prices also have gained up by 90% in 2024. We've seen prices double up in this current year itself. Well, there are a lot of reasons that we have seen prices gain up. One, there has been adverse weather conditions in most of the producing countries, including Brazil and Vietnam. Much of the coffee, whether it's Arabica or Robusta, is produced between these two countries there. Apart from that, it has been about below average rainfall in Brazil, which produces 70% of Arabica for the world there. In Minas Gerais, that is where most of the coffee is produced, we have seen disruption in crop growth as well. There have been concerns in sense of inventories there as well, and that has been keeping prices higher. There also are reports that for 2025 and 26 as well, it could be a fifth straight year of deficit. There are concerns of 5% crop shortfall into that one too. There also is a report from World Cafe, which by the way is the largest coffee trader in the world, saying that the Brazil Arabica production could decline by 11 million bags to 34.4 million there. There also are strong global consumption numbers. And while the fundamentals are on the stronger side, you also are looking at a lot of speculative money riding on this run as well. And most coffee chains by now have raised their prices and expected to do more in 2025 as well. The markets also are looking at concerns when it comes to transport facilities, higher freight costs. And then there are various reports on how producers are holding on to whatever coffee stocks they have. They expect better prices in 2025 as well. So it's going to be yet another year where you will be looking at higher coffee prices.
Okay, that's not good. That's not at all good, Manisha. I'm like quite an addict. But anyway, we have to take what we get. Let's shift focus from coffee and commodities back to stocks and equities. We've got Sudarshan joining in. Sudarshan, you told us about Ola Electric and its launches. Remind us what's the big news and what can it do to the stock?
So the stock has come off opening highs. At one point was up 6%, but still it's still higher in the trade and up around 2%. And the reason of this is Ola has increased the number of stores. Now it's at 4,000. So in one go, company has added more than 3,200 stores. But why is it positive today? The reason that in one go it has added 3,200 stores, and these new stores are co-located with service centers. If you remember, company has been facing issues related to service center. So in these new stores, company has added this facility, so it might help resolve the issue related to service. Apart from this, company has also announced the Move operating system 5 beta version, and with the facilities like group navigation and live location sharing. And also it has launched limited edition of Ola S1 Pro Sonar, and company claims that it is launched with real 24-karat gold plated elements. But major positive part is addition of 3,200 stores and co-located with service center. That's the reason stock is positive today.
All right, got that, Sudarshan. Thank you very much indeed for giving us all those details yet again. So higher capex perhaps in new stores is hurting the stock at this point in time, but actually the whole market is hurting somewhat. I must point out to you that at the moment the advanced declines has turned in favor of the declines, as you can see. We at least started off with the green line. The advance is ahead by a margin. But as you can now see, the declines have overtaken and the ratio is increasing in favor of declines. that's a bit negative for the broader market as well. We have to take a break, but after that, we move away from the micros to the macro India story. Well, how will 2025 pan out? Is it going to be a tad better than the current year? Will the Trump taxes be a little positive or less negative for India than other EMs? All those questions to a bunch of economists who will be joining us on Outlook 2025.